So the tax system is a con. We know this. The UK tax system is very unfairly critical of you landlords and property investors, and to be fair, entrepreneurs as well who have self-employment business or business activities. It leaves us all really in a tax burden situation, and it's very frustrating for everyone concerned. The fight back is on. I'm going to be doing a series of videos in the next 12 months talking about the flaws in the UK tax system, but more importantly, what you can do to fight back against the Labour Party or the Conservatives. I don't care who it is, but I do see this overwhelming push on the amount of red tape that they throw at people. Whether you're a landlord or a business owner, it does cause you problems. My name is Simon Misiewicz. I'm a UK property tax accountant helping landlords and property investors save tax. Here is our website. Feel free to go over to this with you. So some of the issues that you face is lack of clarity of your investments. And I must admit, this is something I want you to really reflect upon. Look at your investments. Look at whether it's stocks, shares, your pension or buy-to-let properties. I do find that when I'm asking questions of people that book calls with me, that they don't really know how their investments are performing. And I find that disheartening because they work really hard to make those investments, but then they don't know how they're performing. That's really kind of off-putting, because if you're investing all that money to begin with and you're working hard for it and then it's just been eroded, then what's the point? I do want you to spend more time just look at your investments and see how they generally are performing and change them if they're not performing very well. Lack of clarity of your overall tax position, and I'm not just talking about income tax. We all have a self-assessment tax return and you can just look at your income tax return. Sure, that's easy. But what about your overall strategy for the next 5 years? Whether that's capital gains tax because you're disposing of property, whether it's inheritance tax planning, you name it, there is a lot going on. And it gets even more complex if you have a limited company. Lack of awareness of current and future legislation. And I know that my videos go up quite frequently on YouTube to help you understand legislation references. But, you know, there's always that element of, well, there could be other things that I'm not talking about, such as cryptocurrency. You know, I don't talk about that at all, in fact. But people don't keep up on top of that and look for, well, where could tax changes affect me in the future? And that doesn't happen often. And not enough actionable steps to take. And what I mean by that is often enough, I do see people say, I have a plan. And then I'll say, well, great, take me through your 5-step plan, whatever it might be. And then tell me how far you're down on that list. And the answer will come back, well, I'm doing a bit of this, I'm looking into this. And the answer is, I've not done much. So one of the things that I often find is that people will book some time with me. Well, they're full of conviction of taking action, but then they don't. And it's really one of those things that if you are going to take your investments and your tax situation more seriously in the future, then make sure that you do action everything on your action list to correct the situation. And overwhelm. This is definitely a classic. People will often find that tax is difficult to understand. There are investments they really don't know who to speak to, so they just leave their investments. The pension providers aren't really that useful for saying, well, how has my investments performed? What's the tax situation likely to be in the future? None of that's really evident. So overwhelm kicks in, so they don't do anything. And I think that's probably the worst thing possible. So speaking to an expert really can help you to get through that. Some of these tax plans which you can implement with our help, of course: tax-free investing, ISAs and other types of bonds, gilts and whatever. You can make some good tax-free investing. You can get tax-free dividends. You can get some tax-free interest as well. So make sure you investigate those. Use limited companies, whether it's a family investment company, that's what the FIC stands for. Whether you're a property owner or a entrepreneur with business activities, you might want to use a limited company. And I say might because it's not for everyone. And I do see a lot of people opening lots of limited companies that they don't need. And one of my jobs is to say, why don't you just close most of those? And that's really just an unfortunate situation they've got themselves in, because they've spoke to someone, whether it's on a network event or an education seminar or an accountant who's probably just looking after their own interests, with all these limited companies, and they think, well, I'm not sure it's worth it. And most times it's not. Capital gains tax planning, timing, using your spousal reliefs. Also, if your spouse is a basic rate taxpayer, then they'll pay 18% rather than 24% capital gains tax. So again, it could be a strategy of moving assets between you. So one of the things that you should be doing is inheritance tax planning. Not enough, if I'm honest with you. The amount of times that I speak to people and they say, I have this income tax liability that I want to really reduce. And then I say, well, what have you done for your inheritance tax planning? And they say, well, I've never looked at it. And it comes as a nasty surprise when I say, well, that's great. I've saved you, 10, 20,000 pounds a year in income tax, but you've now got this 400,000 inheritance tax really bearing down on you. You should look at it. Look at your tax returns. And I'm not just talking about your self-assessment tax returns. I'm looking at things like your pension, not pensions, but your investment tax reports, as well as your limited company accounts. If you've got those, you should look at your tax position overall. It's not just looking at one in isolation. You should connect all the dots and work with someone. Talk about working with someone. Work with your IFA and tax advisors more closely. One of the things that I speak to my clients about is having that regular conversation. We send emails quite frequently to clients and they largely are ignored, I've got to be honest with you, and that's really unfortunate because there is a missed opportunity to really engage with us, and you should be engaging with your tax advisor or indeed your independent financial advisor, wealth manager, call it what you will, but you should be speaking with them on a regular basis. So my name is Simon Mishevich from Optimised Accountants, and hopefully this has been useful. Visit our website, and this is the video I want you to watch next, which is talking about 87% tax on your pension. 87% tax on pensions. Go check it out and see what you can do about it.